on this computer. There you go.
Okay. Sweet. Yeah, I actually did. So
okay.
when I was going through the stuff for chapter 2, part 2, that one I kind of struggled a little bit with. It was just the questions where it was kind of like the word problem and fill in the blank. And so it'd be like, this company performed like $800 worth of service for a client. The client paid $100 immediately, but promised to pay the balance the next month. And then we're supposed to like fill in the blank of like what's supposed to go into the debit and then what's supposed to go into like credit for like cash accounts and stuff like that.
Yeah, let me see if I can help with this a bit. Start questions. Got it. Okay, let me make this a little bigger and then I can see if I could find some of these that well, I guess I could just walk through this. Which statement best describes a T account? Is used to record transactions, is used in a business to accurately report, is used as a formal point note, is represents a ledger account, is a tool used to understand the effects of one or more transactions. So I'd say yes on this one. So I don't know if you so it doesn't really record transactions, it's really just a tool. So I'd say no on that because a journal entry records transactions. T account to use in business to accurately report a financial statement status. No, that's usually financial statements. And a T account is not a formal financial statement. So if I got rid of all these, I would say that this is the right one. Let's see. Rate your confidence, submit your answer high. What do you know? Yep, I got it right. Okay, next question. Which of the following statements are correct? Regarding the sides of a T account, the left side is called the credit. Nope. Right side, yep, that's right. The right side is the credit side. Asset accounts will be increased on the left side. That's a debit. Usually assets, yes. Liability accounts will be increased on the right side, correct? The left side is called the debit side, correct? The liability accounts will be increased on the left side. That's not correct. Asset accounts will be increased on the right side. That's not correct. So I'd say hi. What did I do? Did I do that right? Correct? Reason, the right side. Okay, I think I got it all right. It does say I got it. Okay, let's see if we can get to the next one that answers. To enter transactions on the left side account means you will debit on the left and the account and will cause a increase. Oh yeah, increase in an asset account. Oh, I should have read that first. So let's see what we got there. Did I get that right? Yes. Okay. I'm trying to get to the ones that you trying to enter. So if anybody watches this before it's due tomorrow, they're going to get 100%. But that's all good. I don't mind doing some of this from time to time, kind of give you a little bump here and there. To enter transactions on the right side means you will credit the account and will cause a increase in the liability account. Okay. Hi. Good. Okay. Select the statements that are true regarding debiting and crediting. A credit can increase an expense account. Expense accounts have normal debit balances. So yes, an account where a debit is an increase, the credit is a decrease. That's correct. A credit will always decrease an asset account. Credit will decrease, yes. Crediting an account that exists on the right side of the accounting equation, that means it's a liability or an equity, will reduce it. Crediting, that's false. A debit or credit can increase or decrease an account depending on the account. A debit or credit can increase or decrease an account depending on the account. That's true. Okay, I got a high degree. Yes. Good. Okay. So far, so good. We're what? 5, 6 into 38. Which of the following statements are correct regarding a T account? T account may be used as a tool. Yes. T account represents a ledger account. Yes. The account will show the debit credit effects of a transactions. Yes. T account reflects whether transaction was posted correctly. No. It just tells you what you put in there. Okay, good deal. Okay, the T account for accounts payable had 4 transactions. Okay, we're getting closer to the fill in the blank and figure out the balance things. Is this similar to one that maybe you're questioning, JR?
Yeah.
Okay, the T account for accounts payable, that's a liability account, had 4 transactions entered into it. Okay, it was increased by $300. That means it was a credit of $300 and $100 and by 300 and by 100 and decrease. Okay, its balance at the end of the period would be. So let's just open up our little Excel file so we can do a little T account magic. We'll just call this accounts payable. And we'll just create the little T account. Let's see, debit on this side, credit on this side, right? We've got our little underline there, and we'll drop in and a left on here. That's our T account. We'll put a little under here. That makes it so that's our total. And accounts payable has a credit balance. So we'll start from here. We'll say equals sum of everything above here minus the sum of everything over here. That makes sense so far? That's what a liability account's going to look like. Okay, so now let's go back here and it said it was increased by 300 and 100 and decreased by 50 and 150. So our account should be a $200 credit balance. Yeah. If this was negative, then that would mean it was a debit balance, but it's positive, so it's falling in the right category. That's 200. Well, it would be a credit balance of, what was that? 200? I think that was 200. Yeah, 200. Okay. Doom ba doom. Got it. Does that follow? That makes sense on that one, JR?
Yeah.
Okay. The next one, the account title is shown at the top of a T account. The left side of a T account is called the debit side. And the right side is called the credit side.
And Brother Lewis,
Okay.
I actually took
Yeah.
pictures of like kind of the problems that I didn't really get. Would you like me to share my screen? And
Sure.
then, okay, let's see.
Or I might be able to get there. I don't know if I can get there faster. Let's see. Due date, concepts completed. Yeah, go ahead and show me your screen and I'll work through it.
Okay. Oh, it says that it's disabled.
Oh,
Only the
sorry.
host can do it. It's all good.
I can advance sharing.
Or I could
All participants.
email you the pictures if you'd like.
That works too. I can bring them up. That way we don't go back and forth.
Yeah. What's your email that you would like me to send it to?
Just Lewis, BRI at byuidaho.com or byui.edu. Oh my gosh. Lewis Fry at byui.edu. Yes.
Okay.
Hey Todd, how's it going?
Like for 10 minutes, I've been trying to chat with you.
Oh yeah?
I couldn't unmute my speaker and I couldn't turn my camera on.
Oh no. Oh no, sorry about that.
Whatever you just did, it allowed me to undo it.
Oh, magic. Okay.
Okay.
Oh
I
yeah,
just
you are
sent them
chatting right
over.
here. I wasn't even paying attention. Okay, you just sent it?
Yeah.
Let's see if I can pull up my mail. And So I'm one of those guys that keeps my mailbox clean, which means that the only thing that's on there is anything that needs to be actioned or followed up on. And it looks like I need to follow up on potential drops and a county meeting. What do you know? Gotta love it. Come on. Hopefully it didn't bounce on you. Hopefully I gave you the right address.
Yeah. It's just Lewis BRY at
BRI.
BYU.edu.
It's BRI,
Oh,
sorry.
BRI, my bad. Okay.
BRI, yeah. While we're waiting for that, we'll just kind of cruise through here and see if we can find some more. After entering a transaction to the accounting equation, an increase in total assets can be accompanied by a increase in liabilities and equity.
So Brian, I have a question about week 2.
Yeah,
Not to throw everything. Should I wait till the end?
it's up to you. I'm just working through stuff to make sure that, I provide a little help.
All right. So my question is, for revenue, would revenue also be, or another word for revenue, could that be equity?
Not really. I mean, it falls into equity, yes. But it rolls into equity as retained earnings, right? Revenue is not an equity account because equity is a balance sheet account and revenue is an income statement account. It just gets closed out to retained earnings, which is an equity account.
All right. So number one, I screwed up in week 2, but as before I screwed up when I was doing the access quiz for chapters 1 and 2, I'm trying to remember what question it was. If you give me just a second, I can get back to it. But where was it? It was this one right here.
Okay, how about you find it and I'll continue with JR. When you found it, we'll go back to you, okay?
Okay.
That work? All right, so JR, you got 25 of 38. All right, this one's incorrect. So Cali company, can everybody see this? Can you see it? Okay.
Yeah.
I don't know if I can make it bigger on my thing without downloading
No,
it.
it's all
and
good how it
uploading.
is.
Okay, so Cali company performed $800 worth of services for a client. That'd be revenue. The client paid $100 immediately. So the presumption is $800 first went to accounts receivable, theoretically, and then they paid $100 off. So you should have a $700 receivable, but promise to pay the balance at the next month. Okay, that's the receivable. The journal entry to record the transaction in Cali's book should include a debit to cash. Okay, that's $100. A credit to the accounts receivable. Nope, that's a debit because you're going to do a $700 debit, right? So in here, when I do my entry, effectively what I'm doing, this is a journal entry, whatever date, account, debit, and credit. Okay, so what did they say this was? January 2nd. 1/1/2, you have a couple of different things going on. You have a revenue. You have you have cash for 700. No, what was it 700? Yeah, 700. No, cash for 100. You should have accounts receivable for 700, and you should have your revenue for 800. Okay, that's the journal entry effectively. It balances out because you have your debits equaling your credits. The revenue side is the services provided. Yeah. The cash is the amount that you received. The difference between the two is the $700. So you should would have been this, and this would have been given to you. Cash was given to you, revenue was given to you. The question was this part. They didn't specifically say AR, right? They say that it'd be due or paid in the future. When anything paid in the future is a receivable, and so it's accounts receivable, and the difference between the 800 and the 100 is the 700. Okay, so that's what you would have gotten, and that's how you would have then figured out this answer, because you would have said, okay, well, this cash account is a debit, yes. This service revenue is a credit, that's right. And so this accounts receivable part should be a debit. Make sense?
Yeah, it does. Thank you.
Yep. Okay, so then on this one, was this just an entry, the explanation for that? Must be.
No, that was for a different problem, but that's all good. I just accidentally sent that one.
Okay, no problem. So this one, oh, same thing, but that's the same
That
thing.
time I just got the same question wrong, but for a different reason.
Yep. Yeah, it looks like because this would have been a debit to cash, debit to accounts receivable, and a credit to service revenue. Yep. Okay, on this one,
So Brian,
you got that right.
can I
Yeah,
throw something out there real quick?
sure.
So from, you know, I have a military background, and my military background is all about acronyms. So
Uh-huh.
for T accounts, I have two different, well, not for T accounts, but for normal balances, your normal balance, whether an account has a credit normal balance or a debit normal balance. I have two acronyms. So
Yeah.
everyone knows what an AED is, right?
Yeah.
An automatic electronic defibrillator. Okay.
Yep.
Well, AED could also stand for assets, equity, and not common stock, dividends. Those three things all have debit normal balances.
Equity doesn't. Equity has a credit balance.
Oh, I'm sorry. Assets, expenses, and dividends is what it is.
There
They
you go.
all have credit or debit balances.
Yeah.
And then for shoot, I wrote this down. So I had AED for one, and then the other was its liabilities, equity, and common stock all have credit balances. And I can't remember what the acronym was that I had for them, but it was as I was going through these questions right here,
Yeah.
it was all about determining what type of transaction are you talking about. So a cash is an asset.
Yep.
Okay. And I'm having a hard time reading the screen because it's kind of at an angle and everything, but it was you perform $800 worth of services.
Cash and
Client
service
paid.
revenue.
So cash is going to be debited $800
Yep.
as an increase. And then the revenue account is going to be credited. So that keeps your debit and credit equation balanced at all times.
And that's why I defer to this. Almost every time I do a workout of the problem, I will convert it to a journal entry first.